Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued its stratospheric rise this week as small caps and some of the most speculative meme stocks took the lead. Russell had languished for something like 43 weeks, or you could say consolidated for this entire year, waffling in a very, very tight range. But finally, it broke out to new highs this week, having huge gains on Monday and Wednesday. Those meme stocks, with some names we saw exploding to the upside before, like GameStop and AMC, well, they were joined by Bed Bath & Beyond, which doubled in 3 days, and Avis, that's CAR is the symbol, went from 173 to 545 intraday in 1 day. That's a triple, as the short squeezes, or gamma squeezes as they call them, again showed up in the marketplace. Also, retail moved up strongly in a rotation. We're going to talk a little bit more about that. But when you look at these gamma squeezes and these targets, I think there's going to be fewer of those moving forward, because short interest in a lot of these stocks out there really has dropped very significantly. As a matter of fact, for the stock market, short interest figures are now at record lows. All of that giant movement that we saw early in the week in those meme stocks and special situations, well, came while waiting for the Fed on Wednesday. And it was pretty much assured that the Fed would start to reduce their asset purchases, and they had leaked it was a potentially going to be $15 billion reduction each month. And that's exactly what we got. And it was called the dovish taper, and Powell said he's not ready to discuss increases in interest rates. Powell sees inflation coming down, and he says he will act if it does not, or if it stays strong. But he said he was surprised by the level of inflation now. I personally don't trust that they will know when the right time is to act, because I think that's right now. He sees full employment by mid-22, but he doesn't know what that level is, which is pretty bizarre if you ask me, because they remain in a crisis stance. And what's amazing is that, they think that they're acting decisively as they need to when they admit they know so little. So, the $15 billion taper per month that we're getting, you got to remember that the Fed is still very easy. As a matter of fact, if you look at what the next 6 months will look like during the taper, the Fed balance sheet will likely go from $8.5 trillion now to over $9 trillion. So, when the time came that they wanted to begin QE, or this round of QE, they did it in 1 day. But here, when they want to do something to reduce it, they taper it in 6 months, and he says he'll adjust if he needs to. Interest rates, well, they stay at zero, and the great experiment that we're in continues, as it has for the last 13 years. So the Fed stays easy, and hence investors, they're happy to buy and see that as the market moves up just unbelievably strong in these last weeks and months. Friday, the market moved up here as Pfizer came out with an antiviral pill, which is a combination, like a cocktail, bringing in some of the HIV antivirals, and that has proven to reduce hospitalization and deaths by 90%. That is fantastic, of course, and that is feeding into the sense that the pandemic is soon to be over. And we got very strong employment numbers with upside revisions. And you would think that that would scare investors as the potential for a Fed that moves much more swiftly or the potential for interest rates moving up on their own pretty sharply, that could scare them. But actually it's not. Nothing seems to scare this market. Stock market is at all-time highs. Valuations at levels that there are few words to describe. Investors see that Fed stimulus and government stimulus not far down the road will end. And Democrats now, they're in their last potential spending bill that they could do in the next 3 years, these two bills that they hope to get passed in this next week. And then after that, we're going to be looking at far less stimulus from anywhere. But that may not stop the buyers so much because the upside momentum is unbelievable. But they're going to have to be much more selective because while we believe strongly that a market peak is coming pretty soon and that 22 is going to be a down year, well, the next few months could be very rotational. And tops tend to take a long time to form. So that means that the reopening stocks, the cyclical stocks, we're starting to see those do well. Those probably are going to remain good right now as investors look for places to go. Those stay-at-home stocks, which are now absolutely pummeled, most of them are down over 50%. There's a few of them that are still doing okay. You saw what happened to Peloton this week as it got absolutely annihilated. Those stay-at-home stocks that were such favorites, well, investors are getting hammered in them, and they're not going to be able to do very well in this environment. And the growth stocks, those stocks that led the way up, those very huge cap high-tech stocks, those are liable to start to languish also. So it's very clear, and you'll see that in the retail stocks that Arvi's going to show you this week, that there are specific groups that are going to do well, and we're going to watch for those and do our best to bring that to our members. Small caps now, they're exploding, and they're likely in their final phase, and that's what happens when you get into a very frothy market like we are right now. And that's the nature of the market now is likely to be where you have small attempts to the downside that don't last very long. They may be sharp, but you get buying that comes right back in. But again, if growth is weaker, as we believe it will be, then the upside will be limited once we get past this buying panic that we're in right now. So this panic that we're seeing is likely to turn into much more of a swinging market. And boy, from what I hear from traders out there, they're hoping that is true because this upside market is fantastic for investors, but is a huge challenge for traders. But we think that we're about to get into a much wider swinging market very soon. Stocks for the week make it 5 for 5. That's 7 in a row to the upside in an absolute panic. There's barely any moments of selling this whole week. We had maybe an hour bar here or there where they went to the downside, but remained incredibly strong. They're that way now on Friday, as here I am at midday with the S&P's up over 30, and the I'll make that 32, and the S&P, NASDAQ, Dow gaining over 2% on the week. The Russell, how about over 6% on the week? Just a huge move. The bond market, it's like a buy the rumor, sell the news as far as interest rates go. Interest rates down on the week, and we kind of thought that would be the reaction. And the Fed being so absolutely dovish, that doesn't help interest rates go up either. So the 30 years were up about 1 1/8 points on the week. The 10-year yields fall 7 basis points to about 1.49%. Gold market firmed a bit, but absolutely nowhere that it's going. Still trapped in this correction, and it gains about $16 in the week. Silver around unchanged. And we think that there is risk in this metals market over the next couple of months. We'll call it, 4 to 8 weeks. And we talk about that in Future Speak. So please do become a level 2, 3, or 4 member and watch the Future Speak show on Wednesday, where I show 52 charts in 1 hour. That's 26 different symbols, weekly and daily. And I teach you cycle analysis during that show that I do. And I think it's our most popular show, and I think you'll love it. So sign up for that. Dollar, stronger on the week, and this is very close to a breakout. Now, we talked about it getting over 94 and then potentially moving up to 96. And a very strong formation we're in. Well, it's pretty close to that now with the gains that we saw this week. And we think there are more gains coming for the dollar, which again will be problem for the metals markets. Oil, we had talked about oil potentially moving up to $90 to $92 for light crude. It falls $3.80 on the week, and now we believe that this reaction to what is a failed push for OPEC to produce a lot more, which is really not working, but there is a lot of inventory that's been building out there, and it just looks like the conditions for the oil market are changing. So we're going to say it's topped. And again, you can see that in the Future Speak show. We were on this bull rally the whole way in light crude, and now it really looks like it's over. And the gasoline market, the heating oil market, those are the products out of energy and out of oil, and they also look like they have topped. And we warned that we were seeing that weakening going on in those products. Coming up, Arvi is going to give you a preview of those retail stocks, and I think this is very interesting in this whole concept of a rotational market, and it's excellent work by him. And then I'm going to bring you an intermediate view of the S&P 500 and share with you some of the short-term information that comes out of our stock index report. So I think you're going to find that extremely interesting as we move forward. Please do go to our website, askSlim.com. Become a free member if you want to. Just get a feel for what we do. If you're watching this on YouTube, subscribe to the channel. Click the notification bell, and you will be notified when we put up videos like we do all of the time. Make sure you like this video. Give us a thumbs up. On Twitter, follow us at askSlim. And for membership information, questions about our huge offerings in education and analysis, please do write Matt at askSlim.com. All right, going to show you a little preview right now. Arvi is our lead cycle analyst, a fantastic technical analyst. And we talk about the rotational market that we believe that we have moved into right now. And the retail stocks are a group that is very interesting. And he does an amazing job looking at 14 different stocks. We're going to preview that with you right now for all of the people out there that are not our members. And to see the whole video, you can become a level 2, 3, or 4 member and see this fantastic analysis. So watch Arvi right now.
So this is Best Buy, and what I want to do is just clear out that for a second here. You can see we've really been going nowhere, and if I use the tool here, we can see for how many weeks. We have been really going nowhere for 63 weeks in Best Buy. This is really building energy for likely a bigger breakout here on the upside. What we're looking at is that, yes, we've already had a nice move off of this low from 103.40. But what we would look at is this really strong upturn in the weekly momentum right there, and then that prior cycle high here at 128.57. So this is really quite interesting. We'll be watching for any flag to form and then for this to really break out on the upside. On the upside, we have a intermediate term fib target zone from 129 to around 135. If it gets through that level, we have a 127.2 at 145. So those are really the upside levels here in Best Buy, watching for this to see if it can break out through that old high here at, if I highlight it, 128.57. So a very interesting pattern here in Best Buy, and definitely one to keep on the radar given how long this has been going sideways. So this is Chewy, and what we're seeing here is, yes, a overall negative pattern in Chewy. You can see these lower cycle highs here and these lower lows as well relative to the prior lows. So this is in a negative pattern. When you have a negative pattern, you look for rallies into these red zones followed by a failure. What I'm seeing here is a really nice upturn here in last week's trade, and this is just a little bit of a pullback. So given how early this is, we would still look for this to turn back up on the upside here. In Chewy, this is a name that we are watching fairly closely. If you look at the daily as well, you'll see that there is a bit of a bull flag forming here on the daily time frame under the overall context of a positive slim ribbon. So really looking for this to work its way back to the upside. On the upside, we have a 61.8, which is the top of this red zone at 83.25, and then a 78.6 at around 89 or so. So those are really the levels that we're looking for this to move up to on the upside in Chewy. If it were to break out through this 78.6, that would really be a more positive thing. What you'll see here is that we had the failure in the zone from the 50 to the 61.8. That's this darker red zone, and then this turned down. So we didn't even look at that 78.6. So we'll have to see how this does over the next few weeks here, and then that will give us some clues about this overall weekly condition. So let's say that we got a rally all the way up to this 78.6, then what we would be really be looking for is for a higher low to form into that next cycle low, and then for this to move up, because this would really be a base. So that next key weekly low is due out here in March, so we have a long ways to go, but I just wanted to look at that possible basing cycle scenario here in Chewy.
Great work by Arvi, and please do become a member, and you'll be able to see that whole video, 14 different retail stocks. And if you want to learn more about cycle analysis, please go to askSlim.com, look in the workshop tab, and there's a lot of free information there that you'll be able to see. And if you want, take this amazing 20 video module workshop where you learn this style of analysis. So great work by Arvi, and a good idea about what the rotational market can look like, and that there are many retail stocks that look quite favorable when you watch that whole video. Great work. All right, so now what we're going to do, I'm giving you a little extra peek right there, is we're going to look at the stock market. We're going to do it a little bit differently than we have before. I'm going to give you that intermediate view of the S&P 500, and then I'm going to review a little bit of our stock index report, short-term analysis, give you an idea what that has been saying and what it is saying right now for the stock market on the short-term basis. So a lot of information that I'm going to share with you right now. This is the S&P 500 looking at the SPX weekly chart. So what we're looking at here is cycle analysis. There are 3 cycles represented on here. These arcs are the ideal cycles, and that is what if there was a consistently normal fluctuation in money flows, then it would trade in this ideal fashion where you would get advances and declines. This is the dominant, this is the minor, and there is a major cycle way up over here which points to a much weaker market condition coming out into 22, which is something that I have discussed. So let's just look at these cycles that are right in here, and you can see that the length of these cycles as they're set up, if I just highlight this is 22 weeks and this is 11 weeks. And there's a minor cycle in there at 11 weeks that you can see, and there's a dominant cycle in here at 22 weeks. These yellow ovals are corrective phases, and these are where the cycles nest on the bottom. And what they tell you is periods where there are likely to be significant corrections. However, since this period back in March of 20, at the bottom of the pandemic, the market has been in a steady upward march. These are positively configured and what we call positively translated cycles. there are 3 of them, and now we are in the 4th one right over here of each of these harmonic families that you see. So I'm just going to look at these last 2 cycles right over here so you can get an idea of where we are. Well, right now you can see this is the most explosive period in any of these cycles that we have seen. It keeps moving up through target areas, resistance areas, and now has moved slightly through this confluence of fib extensions that come off of the last 1, 2, 3 minor cycles that are in there. This would be an area that we would expect it would begin to have trouble, and you can see it's already trying to move through there. We'll see if it can hold up there in the next couple days, or it does start to return to the downside. Short-term indicators are suggestive of only a minor pullback coming and then moving again to new highs. So this is an area that it is likely to get through. The period of risk is mid-November through December right in here, and that takes you right towards the end of the year. That's that next oval, and we would expect that it would have some pullbacks. That's counter to what most people would believe regarding seasonality, that you get the Christmas rallies and then the markets hold up. We kind of think this is that Christmas rally right now in what is a just massive move to the upside in just 6 weeks, as it makes a low here of about 42.78 and gets up here to 47.18 intraday. So that's 400 plus points that it's moved in just these 6 weeks, which is a monstrous upside move. And as far as short-term overbought conditions, it is at an extreme overbought condition right now. And those of you that are members can see on the Russell, it is giving a what we call a market condition indicator, an option bias indicator, orange, which is as extended as it gets, and warning that there is likely to be some pullback coming fairly soon. So this is still immensely strong. This is the reversal scout. It turned positive right here, and then we got that explosion that confirmed this 11-week low right there. The 11-week low broke this 78.6%. That made it only a small probability, less than 1 in 3, that it would achieve a new high, but that does happen 1 in 3 times, and this shows you the immense strength in the stock market. So we're looking for some waffling to begin in here, and then sometime later in November and into December, some type of a larger correction in the market. So that is the intermediate view of the market. Again, go to askSlim.com if you want to learn cycle analysis, and go to the workshop tab, and you can see a lot of information about that there. So that's the intermediate view. Still shows you the immense strength in the market and this condition where momentum is so strong that it is pulling the market to the upside. Now let's talk a little bit about our stock index report and our shorter term view that we share with our level 2, 3, and 4 members. This is from a week ago, Thursday the 28th. And what you're looking at here is our technical evidence comparison. Now this, you get this every single day with so much more in our stock index report snapshot. And what we're looking at is trend conditions and momentum conditions for the S&P 500, NASDAQ, and the Russell. So a week ago, you could see it was basically all bullish when you look at that. There was intermediate and longer term trends for the Russell were still neutral, but it had turned up and the short term conditions were very positive. That was 1 week ago on Thursday. This is also 1 week ago on Thursday when we're looking at the trend and momentum technical evidence as of last Thursday on the 28th, and this gives you the short term and the near term and the dates that these turned upward. So you can see when they turned bullish in here for the trend and for the near term conditions. This has been bullish for intraday conditions since the 15th of October that you can see, and there's the dates in there, and these all been very positive. So this is what we reported to our members a week ago, and of course they've gotten updates on this every day. So where are we right now? This is as of Thursday's close, and you can see it's identical. It talked about how strong conditions were, and it remains in those strong conditions. And this is as of yesterday, the same thing. The very, very strong conditions, and you can see in there the dates when they became positive or bullish based on this. So incredibly strong conditions that we've seen, and our indicators have been speaking to that. No matter what I've said along the way about any topping or extreme conditions, this is what we really rely on for trading purposes, looking at these conditions and saying, well, you can't be very short when you have these conditions that say the market is still so strong, and that is what's going on right now. This is our 2-hour area charts comparisons. This is the slim ribbon, and our market condition indicator, our MCI. And what this shows you are the extreme bullish conditions for the S&P 500, the NASDAQ, and the Russell. You can see in here where the Russell was weaker, and then when it began to turn strong, and actually got stronger. And now this is our market condition indicator, and they are at 100. Now this does not represent an overbought or oversold condition. This just simply represents an extreme period of strength, and that's another indicator that says things are really strong. Every single day, Matt puts out a technical overview of the S&P 500, the NASDAQ, and the Russell with all of the important conditions, all of the important levels. And this is just an example of the one that he posted yesterday, just to show you that what it says in here: short-term directional bias and technical briefing. And all of this suggests the S&P current short-term directional bias remains bullish. So just wanted to share that with you. These are the short-term type things and important information that you're going to get. The SIR Daily Snapshot, it's designed for short-term index trading, for swing traders, for intraday traders. It includes technical insights into the S&P 500 with the SPX, the SPY, the NASDAQ, and the Russell, and more than 10 different proprietary charts, 2-hour, weekly, daily charts for each of the indexes. You get our short-term directional bias, our trend and momentum conditions, key support and resistance levels, and our projected price targets. You can get this with a level 2, 3, or 4 membership. You start out in level 2, you're going to get the stock index report. You're going to get our stock index live stream, our SIR live stream, which is live charts. You don't need a special platform. It's got the intraday charts with our reversal scout on there, the important support, resistance levels, and the acceleration zones where you can catch the bigger trades. You'll get our weekly stock index report, our weekly ETF review, the Slimulator momentum tracker with over 1,000 stocks in there with momentum conditions and our proprietary algorithms, and our whole video library, 500 plus videos in 10 categories. All of that is in level 2. So if you want to get this stock index report with all this daily information and all of this, just sign up for level 2 at askSlim.com. You have any questions? Write to Matt at askSlim.com. That's going to wrap us up. I want you to remember to go to askSlim.com, become a free member if you just want to get in touch with us. Subscribe to us on YouTube. Click that bell so you get notified. Make sure you like this video. Give it a thumbs up. And watch our members video in the playlists and past shows. If you are on Twitter, follow us at askSlim. And for any information on anything I shared or anything that you want to know about our huge offerings on education and analysis, please do write to Matt at askSlim.com. That's it for this show. I hope you found the information to be illuminating. We want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.